We know we promised another cryptocurrency lesson stemming from our cryptocurrency lesson last week. But we needed to change things up to address another topic that's been coming up in some friend circles, some family circles, that have really been bothering us because there's a lot of misinformation going on due to the state of the market. There are quite a few conversations with close family and friends this week about what the stock market is and how it operates. Today, we'll discuss what the stock market is. Snack on this. What is the stock market? The stock market is a collection of markets where buying, selling, and issuance of public companies' stock takes place. Simple enough. Stock market and stock exchange are used pretty interchangeably among a lot of folks, but the way to think about it is the stock exchange is actually a subset of the entire stock market. Think about it like this to make it a lot easier. A stock market is a collection of multiple stock exchanges under it. So what that means is the New York Stock Exchange, the Chicago Board of Options Exchange, NASDAQ are all different types of stock exchanges operating under the United States stock market. Does that make sense? Even though it's called the stock market or stock exchanges, there are a variety of instruments that are traded on this market or on these exchanges. Some of these include ETFs, bonds, and derivatives that are based on stocks, commodities, currencies, and bonds. We'll get more into those throughout the podcast, throughout these episodes, but a lot of them you have heard of before, namely ETFs, bonds, you've heard of commodities, you know what currencies are. So this provides a very good platform for you to continue on with your education about investing. The stock market allows companies to sell and issue their stock to the common public. The reason why companies do this is to raise capital through the process called an initial public offering or an IPO. You may have heard of these terms when your favorite companies are looking to go public to raise capital, so they IPO on the stock market, and usually a lot of companies see amazing first day gains from their IPO because so many investors are rushing to get into that stock. We'll also get into IPOs a little bit later on in our lessons. What an IPO means is that the company essentially divides itself into shares. And when the company divides itself into shares, it either distributes those shares among the board of directors, the C-level suites, keeps some of those shares for distribution among employees, looking at you, Amazon, and it then sells part of those shares as common shares to the general public, for the general public to invest in the financial well-being of that stock. As you may recall from our stocks and bonds lesson, buying into a share of a company gives you a piece of that company. So you now have direct ownership in that company. Even though it might be a fraction of that company, you own a piece of that company just buying a share of their stock. The stock market is a vital component of any sort of free market economy, okay? It's a collection of companies, it's a collection of commodities, it's a collection of all of the things that we've mentioned before, and it is very important for a healthy economy for our country. It allows companies to raise money. It allows common investors to benefit from the financial success and well-being of those companies, as we mentioned a little bit earlier. It allows investors to make profits through share ownership, earn money through dividends, and it actually offers a pretty playing level field to common individuals that are investing into the market. Folks like me and you, we don't have deep pockets, so we're not really investing like the big guns or JP Morgan Chase, some of these huge companies that have very deep pockets that let them buy tons of shares. No, what we mean by playing field is those companies are buying shares at the same price you and me are buying the shares at. Sure, do they get early dibs on some IPOs and investments and things like that? Of course they do. They're huge companies. But when it comes to buying shares of, let's say, Apple, Microsoft, Facebook, Tesla, they're usually buying those in bulk at the market prices, or they'll set their bid and ask price, which we will get into in a later video, we promise. No one is at an inherent advantage when it comes to the stock market. And when it comes to stock market, we mean the downright fundamentals, what the stock market is built on. Everyone is at a level playing field, so you can be rest assured that you are on the same level as anybody else that's investing into the stock market. The only difference is the money in the account. Everything else stays constant. It's a democratized way of investing and trading to investors all over the world. So there's a very basic and easy to understand summary of what the stock market is. Buying into stocks and trading is not gambling whatsoever, despite what popular opinions may be. It's also not a blind form of putting your money in the market and figuring it out. It's not. The casino is a very, very different type of environment with very, very different risk potentials. You don't throw your money into the market and just hope that something comes out of it. No, investing into the stock market means just that. You're investing into companies who you think will do well for the long term. And we'd recommend getting into ETFs or blue chip companies. Blue chip companies being the creme de la creme that we've mentioned in our past lessons before. Although there are traders out there that are more speculative and trade for the short term, especially with the wild moves we've been having, think long term for your investment and reap the benefits of investing for the long term and putting money into those accounts. Now, go out there and check a few names of companies that you're interested in. You might be surprised to see that a lot of them may be public. Some of them might be private, which is okay. But for the ones that are public, take a note of those. Look at some of those favorite companies, make a list of what you want to get invested into, and keep investing.